Oh, hey!
Since you're already here, let's discuss accounting effects from business relationships. In Chapter 2 of our book, we discussed about reconciling the following: the purchase amount of the buyer and the sale amount of the seller, the cash paid by the buyer and the cash received by the seller, and the payable recognized by the debtor and the receivable recognized by the creditor. So far we've discussed about buyer and seller, and debtor and creditor. Now, let's discuss depositor and bank. But before I proceed, do you know that cash can be specifically recorded as cash on hand and cash in bank? If you physically hold the cash, it's your cash on hand. If the bank takes custody of the cash for you, it's your cash in bank. Just make sure that cash on hand and cash in bank are available in your chart of accounts.
Hmm.
Am I speaking too fast? You may always hit pause or rewind anywhere in this video. So when you deposit your physical cash, say $100, in the bank, your accounting entry will be debit cash in bank, $100, and credit cash on hand, $100. On the other hand, the bank may record debit cash on hand, $100, and then credit to a liability account. Say something like payable to depositor account, $100. Since the depositor has the rights to the cash physically being held by the bank, this explains the message that you receive from the bank. Blah blah blah, bank credited $100 to your account number blah 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 blah. Let's say the bank lent you $10,000 cash directly to your bank account for a promissory note that you've made. Your accounting entry will be debit cash in bank, $10,000, and credit notes payable, $10,000. Then, the bank will record debit notes receivable, $10,000, and credit payable to depositor, $10,000. Afterwards, you'll receive a message from the bank. Blah blah blah, bank credited $10,000 loan proceeds to your account number blah 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 for promissory note number blah 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 blah. If there is no physical transfer of cash, cash on hand is not involved in the entries. The bank credited the so-called payable to depositor, since the depositor now has rights to the $10,000, and such depositor may withdraw it from the bank at his discretion. At the same time, the bank debited notes receivable to properly account for the promissory note claimable from the depositor when it is due for payment. Now, we can interchangeably say that as your cash in bank increases, the bank credits your account, or as the bank credits your account, your cash in bank increases. So, what happens as the bank debits your account? What? Huh? As the bank debits your account, your cash in bank decreases. Have you heard of any bank's auto-debit arrangements? These auto-debit arrangements allow the bank to make the payments on your behalf, based on certain conditions, thereby reducing the balance of your cash in bank. So beware when you are to sign credit or debit arrangements with the bank, now that you know how it actually works. I hope you've picked up something valuable in my explanations. feel free to click the like and subscribe buttons below. Take care and see you in the next video.
Bye.